Complacency, RVOL, and value migration, just a couple of the topics we're going to be talking about on this week's weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. I'm Josh. I am the founder of Trade with Profile. We are a skill development firm focused on helping self-directed retail traders develop the skills to be active on an intraday basis in products like crude oil, NASDAQ, ES, and Russell Futures. And we do this little video every week just as a way to start our process. So part of getting to consistent profits is having a consistent process. And part of that process is to set some time each week to just say, hey, where are we? What are things out ahead of us? Where are we likely to go? And how can we take advantage of all of those things? So with that being said, we're going to jump in here and start working through all that we have to cover. And we typically start by getting a view of kind of a macro perspective of where we are in the markets. And so as we start by looking here at from a macro perspective, we're going to start here by looking at something called the VIX curve. And this is a relationship of the S&P 500 futures relative to what's happening in the underlying pricing of options in the VIX. Now, the VIX is related to the SPX, so the ES futures of the SPX index. But we track a couple dynamics. And the dynamic is, and this is to the idea of complacency as we're seeing in the markets. The key understanding is that markets rally when everybody's fearful. And there's some mechanics to this around who's buying what, specifically around options, that can impact feedback loops between people who buy options and people who sell options and then people who hedge them relative to all of that. And so we can measure that. We can actually see that. We can see that in this curve. And so I look at it in two different ways. And one way is to look at it here split across, and here is in a combo curve. And what we can see right now is that we are moving towards the bottom of a range, and that really tells us that we're in a complacent perspective. It makes sense also that we've rallied as we've been becoming more complacent. And when that happens, that's just a good warning and clue that, hey, we are now complacent. So we're now in a position where we could start to see some increased lack of complacency or more fear coming in, especially as we have a couple key events and times coming down the road. Specifically, the second week of December, we have FOMC, CPI, and OPEX, quarterly OPEX, all in the same week. So some those are kind of the last remaining big hurdles to get over here in 2022, and that is likely to lead us lower. Now, the question will be, will participants hedge into that event? If they do, then that will tighten these curves and that will take us lower into those events. And then what's likely to happen is that we'll get through the event and then get a little bit of a kick save into the very last couple weeks of the year and close the year. But all in all, largely expecting that we're going to finish the year somewhere in this range based on the timing of that and based on the structure of where we are. Now, a couple other things to be thinking about from a macro perspective. Just looking at the performance of a number of sectors relative to the S&P over the last year to date, and what are the sectors that are the ones that are really interesting. And if you're thinking about like picking up stocks, for example, which ones are interesting to pick? Who's been leading the charge and who's kind of behind the eight ball? Well, it's been all energy all year, right? We can see the XLEs way up here. The S&P is the yellow line right in here. Who's been lagging? Who's been behind this? Has been primarily consumer discretionary. Okay, well, who are these stocks and who makes this up that I might be able to figure that out? And there's a great website you can go check out. This is free, FinViz. You can look at sectors inside of the S&P 500, and this is a heat map based on performance year to date. And what do we find? We find here's the energy, right? Oh, there's Exxon, there's Chevron, ConocoPhillips have all done really, really well. Now, the consumer discretionary, Amazon, Tesla are in here, Nike's in here, Target's in here, Starbucks, McDonald's. These are all companies that have been weighing the markets down. Now, especially given how big, and these are sized, these squares are sized by the market cap. So how big is the company? So you can clearly see the really big ones, right? Apple, Microsoft, Google, by market cap, super huge. And Amazon and Tesla, because of their market cap size, have been dragging that whole sector down. So a general rule of thumb is that if you're looking at, say, for example, the S&P 500, and maybe you watch financial news and they say, well, we're going to rotate from this sector to this. Be on the lookout, specifically in 23, mid to late 23, to start seeing these weaker sectors, the consumer cyclicals, be ones that are attractive because they are undervalued relative to the rest of the S&P. So it's a great way to kind of look and see where you are and what you want to do. If you see a sector that's really strong, like energy, which ones do you want to be in? Essentially, the trend has already been in place. And a good question to ask, whether you're looking intraday, which we mostly look intraday, or over a long period of time, is if everybody can see the trend, how much of a trend is left? Okay, so if in that case, you're typically looking for those that are weaker. So I'd have to go in here and see which are the weaker energy names in that strong sector. Who are the strong names in these weaker sectors would be ones that I would be attractive to as we go along. But that's kind of what we're looking for, a macro perspective. It's been the energy story, inflation around that, also consumer staples, utilities, industrials, the things that require us to build stuff. That's been right in line with the inflation story. And that's been the driving narrative that's going forward. Possible that we've hit peak inflation, but guess what, guys? It's still high. It's still remarkably high, and it's going to take time to get through the whole system. So that's not going away. We have not turned the corner on that. We still have quite a ways to go, at least from my perspective. That does mean, though, that for those of us who are looking to express ideas on an intraday basis, there's still loads of opportunity. And if you like 2022, I think you're going to love 2023. And that's kind of where our focus and mind is in that space for the year ahead. Okay, so that takes care of some macro stuff. Let's talk, just calendar this week and what we're looking for in the week ahead. And it's pretty light week this week. It's a holiday week, so that's the first thing to pay attention to, is that we're going to kind of have 2 days of decent trade, and then it's just going to be get to the sidelines. Wednesday, a few bit of things early on, and then it's going to be very, very low in terms of volume. Friday we'll have a shortened session, but here's what we're looking for throughout the session. We have not really much of anything on Monday. There's an OPEC report. Okay, great, no big deal. There's a FOMC speaker after the close. Tuesday, we do have core PPI. So this is an inflation-related thing. This could bring some volatility. It has been anything inflation-related has been bringing some volatility. So watch that. Actually, you know what? Forget that. That was last week. Haha. I'm joking. Let's go to this week's calendar. Silly me. This week, Tuesday, Fed speakers. Round lunch in the afternoon on Tuesday. Monday, we've got a 2- and 5-year note auction. Watch those. Those are right over lunch, so there'll be a little bit of volatility off of that. And then, like I said, on Wednesday, there's some early releases before the open. We got consumer expectations right at B period, so that's between after the first half hour. We do have oil inventories, and we have FOMC meeting minutes. Again, it's on the Wednesday before the markets are closed. Not expecting a lot of positioning, not a lot of movement off of that. Stay away. Thursday, markets are closed. Nothing to do. They will reopen late that night for Friday's shortened session, which there will be an early close. Avoid it like the plague. I got an idea for you. If you want to lose some money, trade that day. We'll come back and look at those prices in the following week. So that's what we got kind of going on in the calendar. So with that being the case, let's go take a look now and see, from specific products that we like to pay attention to throughout the week. And we're going to start cycling through these and look for potential ideas, kind of how we thought the week was going to play out, where are we looking at, and so forth. All right, S&P, where are we, and what's going on there, and what are we looking for in the week ahead? So after the CPI that we had a week ago, this week we were expecting to be just kind of sideways and higher, potentially up to 4,100. We got fairly close, but by and large, we just stayed in this upper area. Now, something pretty significant has happened in this whole move, is that we've actually shifted the most traded price of 2022, which was up here now around 4,150. It has now come down to where we are right now, around 39.71. So we're in a balanced market. We're also balanced between price, which is here at the 5-day. Now the 20-day is right here. We look at 3 variables to give us some context: price, most traded price of the last 5 days, most traded price of the last 20 days. And we're right here in the middle. We're right here around 90 days, and 5 days are here, 20 days there. This week I'm expecting just to continue to spend time in this area. And we do have that year-to-date VWAP is coming down. So that's the average price of the year for all trades. That's getting close. I think we're likely going to hit that. We're staying south of some big CPI and FOMC from a couple months ago, north of some CPIs here. We're really kind of in the middle of the muddle. And that is likely to contain the auction for the rest of the year. There's not any more big earnings to play out. We're really kind of just balancing and getting ready for the move into the next year. When we look at a weekly basis, we can see just how tight this week was. We had OPEX last week, very, very tight, just accepting and balancing around the upper distribution from the prior week. Again, here's that big CPI number. And we're just right here and very balanced. What does that mean in the week ahead? Well, we have a range. Okay, so let's put a shape up here. So we have a range of price that we're in. And when that happens, we're just looking for the auction to explore the space and then see where are we. Now we do have monthly VWAP is back here trailing. I think that's a spot to kind of watch. That's, overall from a multi-session basis, unless we get below 39.12, it's really in the buyer's court. And the fact that we've also have migrated 5-day value, so this value here, migrated. Prior week's most traded price was here. This week's most traded price was here. So we're accepting value higher on a weekly basis. So as long as we can hold kind of 39.71, still have in play to get up to like 4,100, get that year-to-date VWAP. And, this week with the light volume, we could easily kind of see some drift higher. We're looking at the potential for a weekly expected high. So let's go over here and look at, kind of what we're expecting from a trade plan perspective. Okay. Right here. Let's look at this. So from a trade perspective, we're looking at a weekly expected high of 40.59 and a weekly expected low of 38.88. So up here to the top, right, that's the weekly expected high. So look for us to kind of explore the space. And when this happens, I watch for what happens when we get up here. Do we reject back to the middle? Or can we accelerate? So that will be kind of the thing to watch. But again, without really a lot of interest and relative volume, we're going to be struggling to get there. And what I mean by RVOL, that was one of the themes that we were talking about. So here on the quick sheet, you can see over here on the far right, this is relative volume. So what is relative volume? It's a measurement of participants' interest in the auction, how much they're active over a rolling 30-day basis. Why a 30-day basis? Is because 30 days is enough data to kind of keep us within the current market cycle that we're in, but not so little data that you could have one number that really skews it, and not so much data that you're not kind of staying grounded in what context you are. So 30 days is pretty good. Note where we were on Friday, okay? The ES did 72% of their typical volume on a day. So when you have low volume, you can have things get pushed around. They can be rather jumpy, and it can just be not as typical or predictable in the price action. So one of the things to go back and look is if you've been struggling of late, in the periods when you're doing better, was the RVOL higher or was it lower like it is now? My guess is that it was higher than it is now, and that meant that you'd get into a trade and you saw some movement and there was some momentum to keep carrying it out there with that higher RVOL. When there's lower RVOL, it's about the time you see the thing starting to move and you jump on, and then it pivots or stops or kind of juts around and can do all kinds of crazy stuff with your head. So this is the impact of RVOL, something to be mindful of as we're going forward. Okay, so that is some kind of the general idea we're looking for in the ES. Looking here at just the TPO charts, you can just see how we're just in that bracketed range. Could easily go explore the lows and the highs of this, but likely going to end up in the middle until we get into the following week. watch and look for those expected ranges. So, as we come into the week, we can look for pushes up this direction. We got some naked references down here, some naked references, but ultimately looking for this to kick back here. Now, we could see a little bit more volatility on Monday because OPEX is now gone, and because where we are from a complacency standpoint in the VIX curve, we're a little underpriced, but we just don't yet have the catalyst to lead us lower. So I'd expect that complacency to bake in just a little bit more this week and then come in the week after the holidays to start hedging up before we have a really big week that second week of December. Okay. All right. That takes care of what we were looking for in the ES. Let's now look at the NASDAQ, a wonderful product. Love the NASDAQ. Look here at a monthly basis, and where are we? And even let's actually look at an even longer term basis. We're going to look over here at a quarterly chart. So these are the daily bars, quarterly profiles over the yearly profile. And so far we've been one time framing lower on a quarterly basis. And where are the kind of the key references that we're watching? One is right here around 12,130. Note the highest price this week went right up to that reference and then backed off. Now we do have a little bit of support right here. So where are we? We're in between these two prices. And in fact, where is the most traded price of the year? We're right there, 11,600. But not far behind it is right here. Now, I want you to think about what this whole year looks like. Okay, and note that a complete auction has a bell curve, meaning it looks like this. So we're kind of like this. So next year, I hate to say it to you, but if we're below this area, we're going to go much lower. So this is going to be a key area to either close the year above and accept above and stay above next year, lest we continue to the downside. Okay, so we're on the lows. We definitely have pushed up off of that CPI, but we're below some big selling. We're in the middle of the muddle, trying to limp through into the end of the year. Okay, what does that look like more specifically? On a month-by-month basis, so far, a little bit higher for the month. We're below the most traded price of September. And here's where we've had some big binary shutdowns that we just looked at. Here's a CPI. Here's a CPI. Okay. Right up in this area and backed off. We're in a range. We've got composite value below. We've got some composite value above. We're going to play ping pong, most likely, for the next week or so. No real danger to the market overall unless we get below some of these references like monthly VWAP and start to push this direction. So those are the ones that we're going to watch to the downside. As long as we can hold above this, we can kind of drift in a complacent way to the upside. How did this last week play? About as we expected. We expected after the ramp last week, we were expecting us to balance, and work. We expected if we got higher prices early, we'd get lower prices later. That's how this thing works, and got some defense so that we're now in a range very much like the ES, and watching 11,768 is kind of the key pivot for the week, and look for pushes up towards the edge again. See if those got knocked down or to the downside and back to the middle. Watch the edges, but outside of somebody really wanting to make a move or something we have not expected, it's likely going to control the auction until we get past the next week or so. All right, we'll get that out of the way. Key references are on the quick sheet, so make sure to grab a copy of this and have this in front of you so you know where those key references are. Very balanced auction in the ES and the NASDAQ, and so we're watching that as we go. We do have to the downside, and we did have some good selling excess here on Friday. If we can continue to accept, we do have some unfinished single prints and a naked VPOC down here. That would be the if we push lower and then come back up in this direction. Or if we get above this, we do have some holes in the auction up towards a naked VPOC up there. But we're kind of looking for the inside out and then watch the edges trade this week, right? That is the world in play as it pertains to those products. All right, so that's the NASDAQ. Let's now go take a look at the Russell and see what's going on in the Russell. And we're going to jump over here and look long term as well. Okay, Russell for the year, very much same thing. One-time framing lower all year. Most traded price is up here at 2022. We do have a pretty good node right around 1900, which is where we traded up to and rejected off of. So that's going to be something to get through. We do have some support here. So again, very similar, leaning on the CPI of the prior week, have not been able to cut through CPI and FOMCs from the upside. We're in the middle of the muddle, limping into the close of the year. Okay. So know that that's where we are contextually as we look ahead. Looking at a month by month basis, where are we? We are in a range. Get a different tool here. We're in a range. Close that. A couple different ranges here. Okay, so here's some spots to kind of watch. We're in the middle of the muddle. We are between some pretty significant references, and that can cause the auction to be kind of in ping pong. We could go either direction. Eventually, we'll make a move out of this spot, but it's unlikely to happen until we get past this year. Now, we did go up and test the year-to-date VWAP and rejected. So if we can get above that, that should give us ability to kind of test the top of this range potentially. And then we'll have to see if they can accept and push this way. Otherwise, it's back to the middle. And if we fail below this range, that opens the door to move toward the low of the bracket. Although, whether we get there this year or not, I think we're likely have seen the bottom. We're just running out of time. On a weekly basis, what happened? We came back after making new highs, came back, tested month-to-date VWAP, and then got some support. You can see we kind of in a pinch between weekly and monthly VWAP. So we're going to resolve out of that. If it's to the upside, we'll look for a retest of these highs. To the downside, we'd go down here to the 20-day and test more into the CPI range. If we can press the bottom of the CPI range, that is a poor low that was established purely by the binary event. We've got some unfinished business to the downside. Okay, but until we get through that, higher value for the week, looking to control. Now, whole bunch of holes here in the profile, not a lot of overlap. We'll have to see where we are. We left a naked VPOC down here from Thursday. We did get back to the one on Wednesday. For Monday, we've got a most traded price right here at the 20-day. That'll be kind of a key pivot. If we're above that, look for us to push towards decision levels higher. If it's to the downside, we have a pretty poor low here, which is sitting right on the year-to-date most traded price. If we get below that, then we can go test this naked volume point of control, and then ultimately we could accept. We've got some naked references in the inventory to carry forward, but we got them higher and lower, so we could really go either way. Just watch the middle. Right here's the 5-day volume profile. Watch the middle. We're looking for pushes in either direction out of this area. That will keep you on the right side as we go ahead. Okay, and then finally, let's go look at crude oil real quick and see what's going on in that space. And jump over here. We're going to look at the long-term chart. Okay, big push down this week, away from balance. Where's balance? Balance is right here, and we are pushing to stretch a range. Now, our expectation this week was a move, either up towards 93 or down to 85. It was down to 85 and then some, got into the 70s, testing the lows of the month. And then did find some pretty good buyers that put in some good excess. We'll have to kind of watch this week. We do have a higher low, just barely, okay, as we're trying to defend this range. Let's go look at that on a shorter time frame. Here on a monthly basis, you can see we've come right down to the bottom of this range. Now, also, adjusted 2022 most traded price. Here was the move out of composite value. Moves begin from balance. So when you're in the middle of balance, You can go either way. We went towards the edges. Okay, so here was the low area that we were looking for this way or to this way. We went to the downside. And when we got here, I think this is a good example of what you look for if we're breaching in the equities. As you get down here, what happens? Is it tempo? Is there some movement? When we pushed down here in crude, we had high relative volume. So while the relative volume has been really low in the equities, it's been higher in crude. That led to good velocity and price movement and some good opportunity there. On a weekly basis, what does that look like? Really, really big push away from last week. We talked about, hey, this is going to be the spot that we could go either way. It ended up being a test to the downside and then a break, expanding the ranges, good trending movement, lots of RVOL to support the spots. And then finally, we got low enough that we got a little bit of buying excess now. Now, coming in the week ahead, note where we are from a posture standpoint. So 5 days here, 20 days here, price is here. So a couple scenarios that can play out from that. One, we just trade right back up here. That's one scenario. So the other one is that we find a spot, maybe here, some of these nodes, and we spend more time at those prices and pull value to us. And this is actually related to the development focus that we're going to talk about this week around value migration. So we'll come back to this as an example. But very much looking at an auction that has been, it's one time framing lower. We gapped, but we had pretty good movement off the gap. So we're going to lean into this low to start the week and see if we can't, try to do some more business around one of these composite nodes as the auction looks to balance. So move, counter activity, establishes the bottom of a range, and then we look for, some higher price and then establishing a range. That would be the rest phase. So that's the next thing that we're looking for in crude, which will give us an idea of if we can hold these lows for the end of the year. This is a good spot of defense if they're going to try that. Otherwise, I think we could still keep going, much, much lower. So we'll see how that plays out, huh? Okay, so with that, let's talk about some other ideas that are in focus in the week ahead and things that I'm kind of tracking and paying attention to. And first, we're going to go over here to my little Notion board to just kind of update on some open trades and ideas we've talked about. So we talked about this CAT straddle. I'm still in that. That's doing really well. I think it's up about $300 per pair, doing great. The 3550 puts, I'm going to close these both in the week ahead. They're almost at full profit. And then these stocks I'm not doing anything with until I get to next year. So that's, kind of where we are over there. Some ideas. Still watching Bitcoin. The general idea remains still that we have had this capitulation move lower. We're looking for a move back into that prior balancing range and look at it as a test. Right now, it's just another move lower, so we're staying clear of that one. I do have this Amazon strangle on, and we're holding in that range, so that's working well. Hogs, I didn't do anything with the hogs, but I do want to look at that chart because it's still of interest, which is why I'm going to keep it on the radar. And we're going to go here, look at lean hogs, looking at the December contract. Last week, we did see lower prices into the week, ultimately looking for hogs to get down here to 65. So I'm looking for, early moves higher responsively in the week around the 88 node, and then see if I can't get sellers to come back in to push down towards 64. Again, every dollar move in hogs is $400 per dollar in terms of P&L, and they also trade in a very, very short time frame. So the session is very short. Whether you're doing meats or grains, it's basically like a half session every day relative to what's happening in the equities. But it's an interesting trade. It's one that I'm continuing to watch. And then the kind of the last one that's on my radar, and I'm going to be looking to put this one on Monday. And this is what I call an exhaustion straddle or strangle. And so I'm looking at IBM making a pretty good move here over the last several sessions. Now we're to the point where, especially if we zoom way in here, we will find, if we just zoom into the move itself, there we go. Okay. Look at the profile of this move. So most traded price is down here. This is clearly in the move phase. We know there's basically four behaviors or movements in the auction. There's a move, and then the next thing is going to be a counter activity that establishes a range. How do we know that a counter activity might be coming? Is when we've got a really thin profile like this. We've had an established trend. So now what I'm expecting to see, somewhere in here, counter activity that will start balancing this around here. And so I'm going to build a straddle. I'm just going to pick, the strike here, and I'm going to sell the at the money call and put, and that's going to create a range that I'm expecting, IBM to be in for the next week or two. And while we sit in this range, the premium will decay, and that will be my profit on the trade. So that plus, kind of where we are, we're past earnings, not a lot going on, had a big move here, which is kind of their post-earnings move. So, okay, we're done with that. Now we're going to look to straddle or strangle that a little bit. And if you do a straddle, if you sell the straddle, you get more premium out of it. If you do the strangle, you get a little bit better probability. So not as much premium, but better probability because you can hold the outside of the range. So that's some ideas in focus. And then last but not least, let's talk about a development focus. Each week we look for some idea to express that will help build your skill. After all, we are a skill development firm, and it's our MO is to attempt to help you develop skill. And so our approach to development is built around something called a development pathway, which takes, kind of all I know about the auction and breaks it down into about 16 core principles and ideas. One of them that I want to talk about is, this week is related to Module 7, using value migration to predict future auction action and price action. So what do I mean by that? Well, first you have to define what value means. So for us as auction theorists, value is not a subjective thing, it's an objective thing. And what it is it's a most traded price. So when you get a build out in the profile, all right, we're back to crude oil. When you get a build out in the profile, what's happening is I've got buyers and sellers who are willing to do transactions at that price. When the profile's thin and there's, we're outside of the value area is 70% of the volume. So if I'm outside of that, I'm out here in the weeds. Okay. Well, what's going on? This is outside of value. So price moves from value away from value. And then the question is, will value follow price or price return to value? What's really cool about that is that can give you insight into how are you setting future expectations. One of the key reasons that anybody would use the profile is so they get better at predicting where we're going to go next. But think about the power of that. If you can eliminate some of the potentials of what can happen next, one, you've got ideas on where it's likely to go. Two, it keeps you grounded to where it's likely to go, and you're making better decisions. Okay, so like with crude oil here we've had a move. And I've moved away from value. So value is all above me. So now what am I looking for is I see a little bit of counter activity here, and I'm looking for this auction to either return all the way back to value. Now that would be a little odd given the fact, how swiftly we've moved. Could happen though. Instead, it's more likely that we will balance, we'll rally up here and then kind of, move, and then we're going to build out the profile around one of these prices and then pull value lower. So what are a couple decisions that this helps me make? One, with value like this, I'm not going to chase short. And I'm not expecting crude oil. In fact, if crude keeps moving lower and makes new weekly lows without pulling the 5-day down here, when it comes back into this range, I want to be long. And I want to be long back to one of these potential nodes that if I spend a little bit more time at, could migrate the 5-day down. And that becomes my target. So then I could set my risk against that target. Okay, so we can do that on a multi-time frame basis. We can also do that intraday. We can look at the auction intraday and say, okay, where is value and where is it likely to develop if I spend some more time there? Okay, so look at this. We're going to open this TPO chart here. And we've got a double distribution day. So there's balance here and balance here. So early in the day, value was here. We spent an hour at that price. And then we have a spike lower. And then we spend more time, several hours, so much so that we actually migrate value down here. So when you see a big move, one of the questions are, can I accept that? And accepting that is spending more time and more volume at that price such that value migrates. And when value migrates to where the price is, guess what, gang? It's likely not finished in that direction. Okay. It's a momentary pause, but it's likely not finished in that direction. It's likely still got to go. So if you see price move and you see value come to price, and then price establishes value there, the auction accepts that, means you found other people willing to do business at that price where prices move to, then we are likely not yet done. We're not yet done until we push even further beyond that and fail and come back through that. Okay, so that's kind of what I'm looking for in the Bitcoin idea. We've had an area of balance. We accepted value lower. In fact, let's just go look at that chart real quick. Let's go look at the Bitcoin chart, and I'll show you what I mean. Okay, so here, what do we have? We have value that's been established all the way back to September, late September. We've been in this range. Yeah, I think we've actually been in it even longer than that. Beep. Okay, we've been in a range of price. So this is the auction accepting lower prices. So when we were down here and I saw people trying to buy this thing, and I'm like, guys, we don't have a bottom yet. This is not how auctions bottom. You're accepting these prices. You're not yet done to the downside. Okay. So what happened here? We're breaching below this. What's my key idea? Can we keep hanging out down here? If we can, and if we ultimately, accept more value down here, then guess what? We're probably not done. However, if we can get back inside this in the not too distant future and keep all the bulk of the volume down here, then what is this? This is what we call a test. And then it's highly probable the auction was going to go all the way to this side. And if you go all the way to this side, you just told everybody that we can't go down here. And then we're going to go this way. It's behavior. It's the only fundamental in markets that matters, is behavior. Human behavior is very predictable. Nothing else is. But human behavior around an asset and the profile helps us see human behavior. It helps us see what prices, regardless of time frame, that someone wanted to be active at. That's why it's such a great tool for analyzing the market. You don't have to think about moving averages or a news story. You can just say, hey, where were people doing business? Where were they not doing business? What happens if we try to go to some place we've not done business and we come back to a place we've done business? That's key insight into the auction. That is this idea of value migration. So as we talk about value migration, a couple questions to ask yourself whenever you're trying to tap into this idea and this development focus. One is, where is value currently? So that could be the most traded price for the current day, the last 5 days, last 20, those are ones that I use. And where could value migrate to? So if I'm looking at where we're trading, is there any specific node in the volume profile, the composite volume profile, that's sticking out? That's where we could migrate to. What would need to happen to get there? How much more time? How much more volume? You can look at it sometimes, make subjective calls on how much time I need, how much more volume. How likely are we to get to the place of migration? How close is it? That could be impacted by day type that I'm in. Am I in a trend day? Am I in a rotational day? The more rotations, the more we build out value. Trending days, less value development. What if we fail to migrate value? If we fail to migrate value, get this one. If you fail to migrate value to price, price goes back to value. Let's say that again. If you fail to migrate value to price, price returns to value. So if you know where value is, you already know the price target. Okay? Very, very, very insightful. It's how we use this information to help us be a 4-question trader, which is, hey, what's the opportunity? Which is essentially, where do I believe price is going to go? We use the profile to answer the first question of where do I believe it's going to go, so then I can set my risk against that. You can find more about that at tradewithprofile.com/4questions. Connect with us on Twitter, Trade with Prof. We will never send you direct messages spamming you for crypto. It's always going to be. Feel free to schedule insight sessions with us to get an overview of your approach and see where we can help you get some loft in your approach. If you want to do some specific development work with us, you can do that via our pathway, our development pathway, of which we just gave you a little bit of that here, talking about value migration. The platforms that you saw here are EdgeClear, Edge Pro X, and Window Trader. Be sure to go check them out. And then for those of you who are part of the development pathway and working on building your playbook, we'll see you in Slack for our weekly sessions. A few less sessions this week because of the holiday, but we'll be back in full gear after that. Hey, thanks for watching, everybody. I hope this has been helpful. I hope it's given you some insight and some clarity for the week ahead, so that you're not just going, hey, where am I in the weeds? Still, lots of opportunity left this year, within a couple weeks. And then we're going to kind of shut down the plane and get prepped for 2023, which I think is going to be a fantastic year with lots of opportunities. So now is the time to, really work on the focus, do replays, do back testing, forward testing, and get prepped with the confidence you need to have a fantastic 2023. So with that, have a great week. We'll talk to you soon. Peace.